Nifty touches new records. The index scales above 25,000 for the first time. The Sensex too crosses a record high, crossing 82,000 for the first time.
Maruti zooms more than 3% after reporting an all-round beat in the first quarter. The management says that they maintain the single-digit growth in volumes for FY25. Brokerage firms Morgan Stanley, CLSA, Jefferies, all of them issue bullish calls on the stock.
Coal India climbs nearly 3% after reporting a good set of numbers for the first quarter. Sales rise about 1.5% year-on-year. Lower employee costs, one of the key reasons for the company's EBITDA outperformance.
Crompton surges more than 3% on the back of the Q1 numbers that largely saw an inline growth driven by strong performance in the ECD segment. The management tells CNBC-TV18 that they are sticking to the double-digit growth guidance.
Among all the gaining stocks, one stock which is under pressure is Thomas Cook. After reporting what was a weak set in a seasonally soft quarter, the profit after tax was up 3.1%. That was on account of higher tax liabilities. The key segment of the company did well, so the stock has recovered mildly from the lows.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangalam Malu. Well, the screen is green. The Fed didn't disappoint overnight, so we're not fed up of them. And our own cues as well were fairly supportive. It explains why the Nifty is holding above the 25,000 odd mark. The Nifty Bank is well up 175 points. And the best news today is that, in fact, we do have more number of stocks advancing than declining. And that's the trend. Only problem is in the last few minutes, the mid-cap index has almost moved into the red. So keep an eye out on that front. Well, Mangalam, we're a fourth to that big journey of 1 lakh odd, but 25,000, wow, who would have thought?
Who would have thought, Nigel? 25,000 on the Nifty. Yes, there could be some profit taking, understandable after a big rally that we've had. A couple of things that really stood out in this journey of 25,000, that Nifty is effectively doubled every 6 years. And it's over the longer period of time, irrespective of all the volatility in the market, has tracked just one metric, which is earnings. Earnings over the last many years have grown at 12% compounded, and the Nifty too has grown at 12% compounded. But Nigel, just out of trivia, what was the Nifty when you first started tracking it? Just to see how much do you remember of the Nifty? Because this is one of those I was here when the Nifty was there moment.
When I first started tracking or when I joined?
When you were, I believe, working at the NSE, right? What was the Nifty then?
So at that point in time, Mangalam, I've seen the index fall from 6,300 in 2008. It fell down. I think the index almost halved at that point of time, in that 2008 phase. But I've also seen the market go to an upper circuit at the NSE when, there was post the election verdict. So I've seen the index, I think, at around 3,000. And today it's at around 25,000. What about you?
When I started tracking the Nifty, when I first got into the workplace, it was close to around 4,000, 5,000. So from there, it's been a 5 times up move for me. But what I clearly remember is when the Sensex had hit that 10,000 mark, and Sachin Tendulkar also made his 10,000 runs in the same time. So it's been quite a journey, right? We were talking about the Sensex at 10,000. We were talking about the Sensex at 30,000. When we were at CNBC-TV18, remember those infamous 30,000 T-shirts? And now we're looking at Nifty at the 30,000 mark itself. It's rightly said, right? Every 8 years, the Sensex, the Nifty turns into the Sensex.
Well, Mangalam, I'll tell you what, but we are running that marathon. These 100-meter spurts are going to be very, very good. But be in there for the long haul. This market's only going to go up from here on, and some capital allocation to this market is really become very, very important. So keep your SIPs going. That's the only advice that we would like to give you.
Absolutely. If you're bullish on India, if you want to play the India story, everyone talks about the great Indian consumption space, the great Indian investment opportunity, the great Indian growth opportunity itself. The decade belongs to India. If all of that has to happen, of course, the earnings will come by, and that in turn will reflect on your investments in the frontline indices as well. But let's talk about earnings itself. We have Ugro Capital, one of the companies that we're going to talk to today. The lender's disbursement declined about 35% sequentially. We have Shachindra Nath, who's the Vice Chairman and Managing Director of the company, joining in to discuss the numbers in detail. Thanks a lot, Shachindra, for joining in. I remember very clearly that you said you're looking at 9,000 to 10,000 crores of disbursements in FY24. That was last year. Let's talk about FY25. What is the kind of disbursement target that you have? And a stat that stands out for me is that the disbursal to AUM ratio has fallen to 9.3% versus 24% quarter on quarter. What explains this divergence? And if you could give us targets for this year as well.
So look, first quarter always is little slower for most of the lending institution. This time it has been little more slower than what we would have expected. But our belief is that, last full year, as I've spoken to you earlier as well, We were at the run rate monthly disbursal of around 550 crore per month. We ended the year on the same run rate. We raised capital, and we are gearing now. The system is moving towards more higher monthly disbursement, and that is designed through our micro enterprise branches, which is going up from 100 to 150, which is now complete, to 250 location now. We expect that our monthly disbursement by the end, we will end the year, exit the year should be right around 900 crore. We continue to believe that our disbursement this year should be higher than at least by 25 to 30% than the last year.
All right, disbursements 25 to 30% higher. You were giving us a number which we missed. Could you repeat that number for us?
I was saying that if you look at our trend for last whole year, monthly disbursement was in the range of around 550 crore a month. First quarter was little slower for the month of April and May, but we came back very strongly in the month of June. In the month of July, actually, we are back to our full flow. And as we progress in next 2 quarters, we think that we will stabilize at around 750 to 800 crore monthly disbursement targets.
All right, Mr. Nath, good morning and welcome to the show. So we'll keep an eye out on that 750 to 800 crores from the normal run rate that you were seeing of around 550 crores. Got that. Could you help us out with what's the outlook on the NIMs? I'm just looking at it. I believe there's a ratings upgrade as well that's come in there. So how does this change things for you in terms of cost of borrowing? And what's the outlook on the NIMs?
Look, this is very good news. For an entity like us, which are not supported by large corporate, we are largely institutional player, which means our rating reflects our own standing. So unlike some of our peers said, when rating is a reflection of who the parent is, our rating reflects our core strength. And we have got 2 upgrades in last 4 months, first by CRISIL and now by India Rating. And on the shorter tenor, we are at the highest rating. Now, fortunately or unfortunately, this rating has come at a point of time wherein the liquidity, especially the RBI narrative of banks not to lend too much to NBFC, doesn't help, and neither the rate cycle seems to be changing early. But we are still hopeful that as we progress in next 2 quarters, our cost of borrowing, we have guided that our total cost of borrowing should come down by at least 50 basis points as we exit the year. But some portion of that should get reflected by 25 basis points in next 2 quarters.
So what does that mean for your NIMs? Because, I remember the last time we spoke, you said that NIMs won't see a much downside from levels where they are right now. And that time it was closer to 9%. Since then, it's come closer to 7%. So what is the rough range that you're working with? And especially with your cost of funds coming down, cost of borrowing coming down, can we expect the NIMs to go back to that 8% vicinity? Or will they be around that 6.5% to 7% this year?
No, I think so. We will maintain the NIM. This first quarter is not truly reflective of how the whole year would be. Because our portfolio mix is, the product mix is changing. Our micro enterprise business, which operates at around 20% of gross yield, which was around 12% of our total AUM, should go to around 24% of total AUM this year, 40% next year. So just because our 150 basis point of yield increase in next 8 quarters we are targeting, our NIMs would go back or improve slightly from where it was at exit quarter 4.
Okay, all right. Mr. Nath, your AUM, last reported numbers around 9,200 crores. How do you see this number wind up, say by the end of this year? Because there'll be some repayments as well, there'll be dispersals as well. Put that together. What should it be? And say in the next 3 years from now, what is the target out there? And help us out with segment-wise. How will it look? As of now, what is it? And say in the next 3 years, how do you see it shape up?
Yeah. So look, our long-term aspiration is to build India's largest small business financing company. We know that in last 3 decades, we have seen emergence of a very large consumer financing business, large gold loan company, large tractor financing company. We continue to believe that in last 7 or 8 years, the MSME economy is now very buoyant. The fundamental shift of digitization has taken place. And that's why if the MSME economy has to contribute roughly around 40% of our GDP, then credit has to go. The gap is very, very huge. And that's why we think we have all the right things going for us to be one of those large players in MSME financing. Now, what mean large? I look at it in a 10-year time horizon. We should be a very, very large company. But we continue to grow at this pace rate at which we are growing. our AUM should grow in the range of, we have been doubling our AUM every year. We were 3,000 crore in 22, 6,000 crore in 23, 9,000 crore in 24, and roughly around same range or little bit higher we should grow this year and next year.
All right, if that was supposed to be the case, then we'd look at numbers closer to 20,000. But we'll talk about that when we come to that, Mr. Nath. Finally, before letting you go, the rate at which you are growing, you're speaking about yields increasing, the cost of funds reducing. All of that does beg a question towards asset quality as well. Will there be ever an accident out here? So what is your asset quality outlook from here on, both on the GNPA, net NPA front, the provisions that may increase? If you could give us a sense of the credit cost target that you have from here on for the next couple of years.
We have said that, through the cycle, we would target a 2% of total credit cost, and that is a function of the blend of MSME financing we do. We do right from a 5 lakh rupees of secured loan to 3 crore of secured loan. We do multiplicity of product across the nation. We do prime secured business loan, machinery, rooftop, solar, micro enterprises loan. And as we grow, we are granularizing our portfolio by going deeper into the India's hinterland. And we believe as we continue to grow in the lower ticket size, little higher yield, more secured businesses, the economy is more resilient, customers are more stronger, and that would maintain the portfolio quality. Last 10 quarters, our login to approval rate have remained static at 30%, which means for every 500 crore monthly disbursement, almost 4 times of that we originate. So we maintain credit quality by controlling the funnel, and we'll continue to do that.
Okay, Mr. Nath, appreciate you joining in. We'll hold you to these numbers, wishing you and your team all the best. The next time around, we look forward to having a chat with you. For the time being, let's shift focus to our special segment. We get a few ideas for profit from Money Control Pro. Anubhav Sahu joins us to fill us in with his pick. Anubhav.
We're talking about fluorochemical major Navin Fluorine, which posted an uninspiring set of results for Q1 fiscal 25. Sequentially, net profit degrew, but the steady show in the high-performance product segment provided some relief. Other two segments continued to have a lumpy revenue trajectory. That said, guidance in terms of capability enhancement was positive. So in the next 18 months, company is planning to commission various capacities across segments that would provide a base for multi-year growth. Now, the capex outlay is upwards of 1,300 CR, and major capex underway are that of doubling of R32 gas capacity, anhydrous hydrofluoric acid plant, and phase 1 of the 4th CZMP facility. In addition, Q2 is expected to see commissioning of 540 CR capex of agro specialty, which should help in better second half for the specialty chemicals, along with improved channel inventory. However, what keeps us constructive is the commentary regarding various sales agreement, which should help new capacities to ramp up. Now, this includes a supply agreement for a patented agrochemical product for the Japanese market, and various CDMO orders secured for the late-stage molecules. Now, while the valuation is at a premium, we believe investors should accumulate the stock on decline and potentially participate in the company's journey towards high value-added business mix.
All right, with that, we'll step into a short break. On the other side, don't go anywhere. We have Puneet Lalbhai, the Vice Chairman of the Anup Engineering Group, to discuss their company's earnings as well. Stay tuned to that.
Welcome back. Well, let's focus on Anup Engineering then. They delivered their first quarter numbers. To understand what's the way ahead from here on, we have Mr. Puneet Lalbhai, who is the Vice Chairman of Anup Engineering. Hi, Puneet. Good morning and good to see you in. Well, tell us about, how is the order book looking? I'm looking at the absolute number. It's come down to around 810 crores. So a bit of a decline on a sequential basis. What is the order inflow you're factoring in for this year? And also split it up for us between exports as well as domestic business.
Sure. I think the order book is extremely strong. As of now, the order book for the entire year is full. Of course, this being a project business, there will be some lumpiness in the order inflow. As far as the overall market conditions go, the Indian market is a little bit slow at the moment because of the election period and no new projects being taking off in this phase. However, the export market is extremely strong, and we believe that that the order book to come will look extremely strong. So this year is completely full. Last year we ended at about 50%, close to 50% exports. This year also we are looking at perhaps bettering that number in terms of exports.
50% exports, you're looking to better that number. You said that your order inflows are lumpy because of the nature of your business, so which is why there was not much that came in the first quarter, also impacted by the elections. So let's talk about another way to look at your business going forward, which is your bid pipeline. In both your export and domestic markets, if you could tell us over the next couple of months, like next couple of quarters, what are the bids that you are making, and what is your order book right now? What does it stand at? And what are you anticipating to close in this year in terms of inflows?
So I think the way to look at this business is that we are attempting to grow at 25% year on year. So last year we closed at around 550. This year the target will be to cross 700, and next year the target would be to grow 25% from there on. We've also added Naval Engineers as an acquisition, so that should add another 50-60 crores to the overall entity. So if I were to give a guidance, we should be at that 750 mark by the end of this year and look to grow 25% of the time.
All right, we missed that number on the inorganic growth. Mabel, how much will that contribute?
50 to 60 crores this year.
50 to 60 crores this year. So 700 plus the 50 crores, that's how you're counting for it, or it's 750 plus the 50 crores?
No, 700 plus the 50 crores.
Plus
so
50.
We should be ending the year at 7.
And Mabel, can be scaled up from this 50-60 crores of annual revenue, say in the next 3 years? What does it go to?
So we are targeting that entire campus should be able to give us 150 to 200 crores over the next 3 years.
Oh, the next, okay, so from around 50-60 crores, you're saying it goes to 150 to 200 crores. Oh, that's quite interesting. Give us a number on the margin guidance as well. What should the consolidated margins look like? And if you can throw some color on what's Mabel's margins, is it lower? If yes, do you see it scaling up?
So Mabel focuses more on higher metallurgy. It's a facility that does smaller size vessels, but higher metallurgy. So the margin structurally is lower. So the return on capital employed would be very similar. And the overall margin for the group, we always guide as 20% plus. And we look to have a consolidated margin of 20% plus.
All right, you will do 20% plus margins. That's what you've guided for. Mabel ROCE will be similar to what your current business is. I just wanted your view on further capacity enhancement, because you've extended the PS Bay at Kheda. That would be commissioned, I think, sometime right now, anytime in the very near future. How much can that add to your revenues? What's the ramp-up schedule here? And what are the further capex plans that you have post this?
So I think factoring in this year's capex plans, overall, including Kheda, Odav, and Mabel, we have reached about 1,000 crore top line.
1,000 crore top line by when?
I mean, we will, of course, the growth will be this 25% rate. We also need to manage, the execution of the growth. But the capacity addition is capable of taking us to 1,000 crores now. So that will come over perhaps 2 years if we just add 25% to this year's ended guidance. It will take us 2 years.
Got it. 2.5 years, new capacity, including Mabel, will give you close to 1,000 crores additional revenue. Mabel, you just said that at peak could be about 150, 200 crores in terms of revenue. So one assumes that maybe the PSP at Kheda would give you around 750 to 800 crores as well. Thanks a lot. It's been a pleasure speaking with you. We hold you on to those numbers, and we'll keep connecting with you at the end of each quarter to get an update on what business is looking like. That's about Anup Engineering. Take a short break, come back, tell you about the markets and a lot of individual stocks which are buzzing around. Welcome back. Tata Consumer saw some profit booking post numbers yesterday, has now moved higher. We have some important news at the bottom of your screen on account of IDBI Bank. We'll try and connect with Ritu maybe shortly to try and understand what exactly is taking place out there. As of what her story is, there have been 3 potential suitors who've been given the fit and proper certificate by the RBI for IDBI Bank. Who those suitors are and what happens of this is something we'll be tracking.
Yeah, I think, and the name should come up for you on the screen. I think Fairfax is one of them. So we should get the names up of the 3 potential suitors. Fairfax, Emirates, NBD, as well as Kotak Mahindra Bank. They're among the likely suitors. Remember, the sheet has been waiting by whether or not this can close out in this year. And as we've been reporting that maybe that process starts from the month of August itself. For the time being, the stock is more or less flattish, so I think it's come off a little bit from the low point of the day, Manglam.
What's interesting is that Kotak Mahindra Bank also, as Ritu has been pointing out, is not very keen on an investment right now. Otherwise, the street would have thought that maybe Kotak Mahindra Bank would have been an important suitor now that it's got the certificate. Kotak Mahindra Bank at the low point of trade, but not to do with this news piece itself. They may not be very keen to pursue this acquisition, so that leaves you with Fairfax and Emirates NBD. But that's not for us to decide. I guess that's for Ritu to find out and tell us, along with the RBI as well. With that, we'll slip into a short break. Take your leave on this edition of Chartbusters. Stay tuned. Trading Hour comes up next.